Insurance is supposed to protect your money. But here's the uncomfortable truth. For most people, insurance is quietly draining it instead. Every single month, you hand over money for policies you barely understand, written in language designed to confuse you, sold by people who are paid to upsell you. And the result? Most Americans are making the same handful of expensive mistakes over and over, bleeding thousands of dollars a year, and they have absolutely no idea. Here's what makes this so brutal. These aren't dramatic, obvious mistakes. They're quiet ones. A box checked wrong. A policy never reviewed. A good deal that's actually a trap. Tiny decisions that silently cost you hundreds, sometimes thousands, every single year you don't fix them. In this video, I'm going to walk you through the 7 most common insurance mistakes that are costing regular people a small fortune. Some of these you are probably making right now. And by the end, you'll know exactly how to fix every single one, often in a single afternoon. My name is Jenna, and I spend way too much time obsessing over the boring financial products everyone signs up for and nobody actually reads, the fine print where your money quietly lives or dies. And insurance is the undisputed king of expensive fine print. Hit that subscribe button and give this video a thumbs up so the algorithm shows you the next one. Because this is the rare video that could put real money back in your pocket by the end of the week, not in 30 years. Now, before we dive into the 7 mistakes, you need to understand why insurance is so uniquely good at separating you from your money. Because the system is not built in your favor. Here's the thing nobody tells you. Insurance is one of the only products you buy hoping to never use it. That makes it almost impossible to tell if you're getting a good deal. You can't taste it. You can't test drive it. You just pay year after year and hope. And the companies know this. They know most people set it up once and then never look again. They know loyalty makes you lazy. They even have a name for charging longtime customers more. It's called price optimization, and in most places it is perfectly legal. So the entire system quietly rewards the people who pay attention and punishes the ones who don't. So that's the setup. Now let's get into the 7 mistakes, starting with the most dangerous one of all. Number 1. Driving on your state's minimum liability coverage. This single mistake can erase everything you own. Here's the declaration. Most states require only a tiny amount of liability insurance, sometimes as little as $25,000. And to save a few bucks a month, millions of people carry exactly that bare minimum. Why does this matter? Because if you cause a serious accident, the costs can climb into the hundreds of thousands. Medical bills, lawsuits, lost wages. Your insurance pays up to your limit, and then everything above it comes straight out of your pocket. Your savings, your home, even your future paychecks. Here's the dollar reality. Picture a $25,000 limit against a $200,000 hospital bill. You are personally on the hook for the other $175,000. All to save maybe $200 a year. The consequence? One bad afternoon and a decade of wealth building is gone. Just gone. The fix is simple. Carry at least 100 over 300,000 in liability. It often costs surprisingly little more. Which brings us to why you might be overpaying for everything else. Number 2. Never shopping around. The loyalty penalty is real, and it is costing you every year. Here's the declaration. You would think being a loyal customer for 10 years would earn you a discount. The opposite is often true. Insurers quietly raise rates on the customers who never leave, betting that you won't notice. Why does this matter? It's that price optimization I just mentioned. They're counting on your inertia. The longer you stay without ever checking, the more you tend to quietly overpay. Here's the dollar reality. Drivers who compare quotes save, on average, up to $1,000 a year on car insurance alone. $1,000. For a single afternoon of comparison. The consequence of skipping it? You're essentially paying a loyalty tax every year forever. The fix. Get quotes from 3 different insurers every single year when your policy renews. Which leads us straight into the single most expensive insurance mistake of them all. Number 3. Buying whole life insurance when all you needed was term. This is the big one. The one that quietly costs the most. Here's the declaration. Walk into a lot of insurance offices and you'll be steered hard toward whole life or permanent insurance. It sounds wonderful. It's an investment, they tell you. It builds cash value. Here's the truth. For the vast majority of people, it is an expensive mistake. Why does this matter? Because whole life can cost 10 to 20 times more than term insurance for the exact same death benefit. You are paying a fortune for a clunky little investment account bolted onto your insurance, usually with high fees and mediocre returns. Here's the dollar reality. A healthy 40-year-old might pay around $50 a month for $500,000 of term coverage. That same person could pay over $550 a month for whole life. That is a $500 a month difference. And here's the consequence that matters. If you bought cheap term instead and invested that $500 difference yourself at 8% over 30 years, it becomes around $685,000. The whole life policy almost never comes close. The fix. For almost everyone, it's 3 words. By term, invest the difference. Which brings us to a tiny policy almost nobody buys that quietly protects almost everything. Number 4. Skipping an umbrella policy. The single cheapest protection in all of insurance. Here's the declaration. An umbrella policy sits on top of your home and auto insurance, and it kicks in when their limits run out. Most people have never even considered one. Why does this matter? Because it's the protection that matters most when life goes catastrophically wrong. A serious lawsuit. An accident that blows past your other coverage. It guards everything you have spent years building. Here's the dollar reality, and it's beautiful. $1 million of umbrella coverage typically costs just $200 to $300 a year. Sit with that ratio for a second. About $250 to protect $1 million. $1 of cost, guarding $4,000 of your assets. The consequence of skipping it? A single judgment above your auto limits can come after your home, your savings, even your future wages. The fix. If you have any real assets to protect, an umbrella policy is one of the smartest, cheapest moves in all of personal finance. Which brings us to a mistake that runs in the complete opposite direction. Number 5. Carrying a deductible that is way too low. You're paying to insure things you should just handle yourself. Here's the declaration. Tons of people choose the lowest possible deductible, $250, $500, thinking they are playing it safe. They are actually overpaying badly. Why does this matter? A low deductible means a higher premium every month forever. You pay extra year after year just for the privilege of being able to file a small claim. And filing small claims often raises your rates anyway. Here's the dollar reality. Raising your deductible from $500 to $1,000 can cut your premium by 10 to 20%. On a typical policy, that can be a couple $100 back in your pocket every single year. The consequence of keeping it low? You bleed money slowly, paying to insure tiny risks you could easily cover yourself. The fix. Raise your deductible as high as your emergency fund can comfortably absorb. Insurance is for catastrophes, not for paper cuts. Which leads right into all the coverage you're paying for and don't even need. Number 6. Paying for coverage you already have or never needed. The hidden subscriptions of the insurance world. Here's the declaration. There is an entire industry built on selling you duplicate or near useless coverage. The rental car counter. The extended warranty. The credit insurance. Most of it is nearly pure profit for them. Why does this matter? Because so much of it overlaps with protection you already have. Your credit card may already cover rental cars. Your existing policies may already cover what they're upselling you at the counter. And extended warranties? Study after study shows most people pay far more for them than they ever get back. The consequence? You keep funding their profits for protection you'll likely never use or already own twice over. Here's the dollar reality. That rental coverage at $30 a day. The extended warranty for a few hundred. The collision coverage you're still paying on a car worth $2,000. It adds up to hundreds of dollars a year of pure waste. The fix. Before you buy any add-on, ask one simple question. Do I already have this? And drop collision coverage on any car worth less than a few $1,000s. Which brings us to the most overlooked mistake of them all. Number 7. Ignoring disability insurance. You insure your car and your phone, but not the thing that actually pays for both. Here's the declaration. Quick question. What is your single most valuable asset? It is not your house. It is not your car. It is your ability to earn an income. And almost nobody insures it. Why does this matter? Because just over 1 in 4 of today's 20-year-olds will experience a disability serious enough to stop them working before they reach retirement. So ask yourself, if your paycheck vanished tomorrow, how long would your savings actually last? For most people, the honest answer is terrifyingly short. Here's the dollar reality. Disability insurance can replace 60% or more of your income if you cannot work. Many employers offer it for a tiny payroll deduction, and people wave it off without a second thought. The consequence of skipping it? You get hurt or sick, and your income, the engine behind every single financial goal you have, just stops. While every bill keeps right on coming. The fix. Check whether your employer offers disability coverage and take it. If they don't, price out a private policy. Protect the engine, not just the car. Which brings me to the bigger lesson hiding behind all 7. Let me zoom out for a second. Because once you see the pattern underneath these 7 mistakes, you will never look at insurance the same way again. Here's the secret the wealthy understand in their bones. Insurance has exactly one job: to transfer the risks you cannot afford to take on yourself. That is it. That is the entire game. The catastrophes, a lawsuit, a disability, an early death while people still depend on you, those you insure aggressively, because they could wipe you out completely. But the small stuff, a $500 repair, a cracked screen, you self-insure. You cover it from savings, and you pocket the premiums you would have wasted. Regular people do this exactly backwards. They overinsure the small stuff with rock-bottom deductibles and junk add-ons, and they badly underinsure the catastrophes with state minimum coverage and no umbrella. They pay constantly to protect against paper cuts, while leaving themselves wide open to the things that actually cause bankruptcy. And here is where it quietly becomes about wealth. Remember that whole versus term mistake? $500 a month, invested instead of wasted, becomes about $685,000 over 30 years. And that's just one of the 7. Fix several of these, invest the difference, and you're looking at a 7-figure swing across a lifetime. The wealthy don't just buy smarter insurance. They turn the savings into investments. The information gap, one more time, is the wealth gap. And this time, it is hiding in the fine print you were never supposed to read. Let me paint you a picture of what getting this right actually feels like. It feels like opening your renewal notice, and instead of sighing and auto-paying it, you spend 20 minutes shopping it around and find an extra $800 a year you'd been quietly losing. It feels like raising your deductible, watching your monthly premium drop, and moving that exact difference straight into your investment account. It feels like buying up for a tiny umbrella policy and feeling a strange, new kind of calm, knowing that one bad accident can't take your house anymore. It feels like canceling the extended warranty, the duplicate rental coverage, and the whole life policy you got talked into, and feeling lighter with each one you kill. It feels like knowing that if the worst ever happens, a disability, a lawsuit, a sudden loss, your family is protected. Not by luck, by design. And that feeling, that quiet confidence that you've covered the big risks and stopped bleeding on the small ones, is honestly worth more than all the premiums you'll save. So, there you have it. The 7 insurance mistakes quietly costing you thousands, and exactly how to fix every one of them. 1. Ditch the state minimum liability. Raise it before it ruins you. 2. Shop your policies every single year. Loyalty is a tax. 3. Choose term over whole life and invest the enormous difference. 4. Buy the umbrella policy. The cheapest protection there is. 5. Raise your deductibles. Insure catastrophes, not paper cuts. 6. Cut the duplicate and junk coverage you already have or never needed. 7. Insure your income with disability coverage. Protect the engine. Here's what I actually want you to do. Don't try to fix all 7 today. Just pick one. The one that made you wince a little, because deep down you knew it was about you. Fix that single one this week. then come back and fix the next. Because insurance was never supposed to be the thing draining your wealth. Done right, it's the quiet foundation that protects it. So go read the fine print they were hoping you'd ignore, and take back the thousands of dollars that were always yours.